Testing 1 2 1 2 testing. Good evening, everybody. Let me make sure we're already recording. Beautiful. Everything's locked in. If you can hear me somewhere on your platform, you should be able to use what's called the chat function, or you can be able to raise your hand. Just either shout me a little holler in the message or raise your hand to let me know that you can hear me. You should be able to see a screen. That screen should say, excellent. I see some hands going up. I see some people. You should be able to see a screen. The CEIL Group, money market call, of course, is October 29th. If you are following us if you're on an international link, there is a slight delay. Just make sure that your microphone is muted because there's a slight delay when it's going to international. And of course, if you're joining us on our Facebook page, please like, subscribe. All right. Let's see. Let's make sure everybody's hands are going up. Hands are still coming up. Excellent. And we're going to keep going because, guys, as you know, we are very tight on the schedule. We have a lot of information to go through today. So, of course, we have to do our disclosures. Always want to make sure we're adhering to the SEC. We do like to follow the rules. I'll let you guys read over this. I'm not going to take my time to do too much reading. But to give you a quick breakdown, of course, we disclose that any of our information we help you with, training information, educational material, we are not professional financial advisors. All right, there we are. Beautiful. We are not professional financial advisors. We're just here to help you. We're not your advisor. Anything, any information, any news we give you, any help we give you, feel free to run that by your broker if you have one, your advisor if you have one. If not, do your due diligence. But we're still here to help you guys get you a lot of information. And of course, there's significant risk trading in the market. If you haven't started trading, it's important you know that. If you have started trading, this is something I do not have to tell you. And guys, the past does not dictate the future. So, of course, we see this big money sign here. What is this all about? I told you guys, these are going to be the 5 steps to start making money on the market. If you have already started trading, some of this will be a refresher. Some of this will make you feel good. There may still be some stuff you learn. If you are new to trading, this is going to help you start from step 1. Number 1 question that we get as a group all the time is, where do I start? What do I do? We're going to help you do that. Hopefully, you have some note-taking material, guys, because obviously we only have 45 minutes, and you're not going to learn how to trade in 45 minutes. I'm sorry. But what you will learn is a lot of little breadcrumbs and keys that are going to get you in the right place, hopefully at the right time, and get you start making money. Hopefully give you an opportunity to join the team or join a group. So what are these 5 steps? I'm going to outline them real quick. Cash, credit. What does that mean? We're going to talk about it. Step 2, learn and then learn some more. We're going to set up a trading brokerage, basically meaning you're going to be able to buy stock, bonds, options, anything through a certain company. Practice, practice, practice. Obviously, that'll tie in later. And then number 5, join, grow, share, and teach. Very simple. Each one teach one. We all know what's going on here. Let's keep going forward. So let's break it down. When we talk about cash and credit, why is that important in trading? Very easy question. Before you start spending your money on investing companies, you have to make sure that you know how much money you have to spend, how much money you have to gain, how much money you have to lose, and what your objectives are. Most people look at trading as an end-all, be-all. You make 1 or 2 big trades on a penny stock, you make $1 million, and then you retire for the rest of your life. That would be nice. However, that is not realistic. So the first thing we attack or we look at when we're starting to trade is our financial background, whether it's terrible, good, or excellent. I'm a person where my financial history starting off was terrible. Student loans, multiple credit cards, you name it, I was over leveraged. Young in college, then you could get as many credit cards as you want to. But as I started trading and I struggled, 1, to make any money, 2, to figure out if this was good for me, the first thing I had to learn to do was attack my finances. So we teach the whole financial literacy. It's not just stocks. We teach you everything. You guys know what credit is. A lot of us may not have good credit, but that can change very quickly. All credit is, if you don't know, is just basically how well you borrow money. Are you good at paying people back? Do you over leverage, or do you put too much on yourself you can't handle? Or do you have you not borrowed from anybody before, so you don't have much history? These things are used by companies, employers. I mean, if you try to get a job, you'd be surprised how hard it is. They actually check your credit. So some things you can do to help your credit, guys, that are actually pretty simple. Pay your bills on time. Now, it's not simple if we're over leveraged, meaning that we spend more than we're making. It's a hard thing to face is our finances, because what we learn is in American Western society, it is taboo to talk about money, even with your family. But that's something we have to break down, because if we don't know how to attack the problem, we're never going to solve the problem. Increasing your revolving credit responsibly. So most people will tell you, cut the credit cards up. That's actually incorrect. They want to see that you have multiple accounts, that you can manage multiple sources of borrowing. But the key is responsible, guys. If you have a credit card, you don't want to get as many as you can and then put everything on those cards. Credit cards are really just there to supplement your cash for a short amount of time. So actually having multiple accounts is a positive, but it's about being responsible. With those accounts, do not go over 30%. What does that mean? Really quick. If any of you give, I'm talking to Christians, whatever religion, we 100% support, but we know in the Christian religion, tithing is huge. Everyone, if you grew up in a tithing household, which I did, very strict parents, you know how to calculate like, oh, somebody want my mic? I hear some kind of, just go ahead and mute everybody. Sound like somebody's hurt. They need some milk. But yeah, take 10% of whatever your limit is, multiply that by 3. That's the most you can spend. Sounds crazy, I know, but this is a very, very quick way to raise your score very quickly. Try not to run your credit multiple times. Space it out. Wait 1 year, maybe apply for 2 or 3 lines of credit. Wait another year, apply 2 or 3, or if you can, try not to apply for it unless you absolutely need it. Because when you do need to make those hard inquiries, you don't want a lot of them on you. You only want maybe between 2 to 4 at the most. But the fewer hard inquiries you have, getting a car, going for a house, getting an apartment, credit cards, lines of credit at companies, those things hurt you. And the last thing, second to last thing, guys, challenge your credit report. I'm not going to get too deep into this, but everyone should be able to check your credit report at least once a year for free. And that website is right down here. You see annualcreditreport.com. Check that. Go and see anything that is incorrect, dispute it, but there's a certain way you want to dispute it. U.S. certified mail. Now, if you have any questions, guys, reach out to me. I'll be more than happy to break that down to you. But because time is short, we can't help you with that in detail, but we have a lot of great information, and we have some tools and resources to help you take charge of your cash and your credit. Tips for getting ready to start investing, guys. Just a couple of them here. If you're not ready to start investing immediately, you have to start showing discipline. Set aside a certain amount of money every week, every 2 weeks, every month, however you feel comfortable doing, but hold yourself accountable. Don't say, oh, I really need to buy this or do that or whatever. Let me dip into that. Discipline. The hardest thing to attain in life, honestly, is discipline. But once you start to make those steps towards it, actually decisions and things in life become much easier, because I guarantee the reason why most of the things that happen to you are happening to you is because of you. You don't want to take accountability of that, or you don't want to admit that, that's okay. But when you do get to that point and you do admit it, you start the process of turning that around and becoming in control of how things go for you. Second thing, guys, really small. Pay off small debts. If you have big student loans, I'm not telling you to do that. But little debts, 35, 45, 100, 200, systematically start to eat away at these little things you owe. And then guess what? Stop putting yourself in position to borrow. You need all of that cash to invest into the market. If you do have credit, anything like that, and you have been making good payments, take advantage of the opportunity to see if you can refinance your rate. Pay less interest. People are comfortable paying interest because that's what we've been taught to do. Stop giving your money away. If you can't afford to pay cash and you don't have the money coming in very shortly, don't do it. That is one thing that we do in this country. We over leverage ourselves. We don't have any money to do anything because we're strapped. I'm not trying to be mean, but I'm trying to help you get there as quickly as possible. And don't look at investing as I'm going to make one trade and I'll be rich. It does not happen like that. You're going to make a lot of trades. Some of them are going to lose. Some of them are going to win. The key is to hone a system and win way more than you lose. And in that process, you're going to hit some big ones. If you've been trading with us, you noticed last week, we had an amazing week. But we're going to get into that. Let's rock and roll. And the last thing, for my people who have just started to trade, when in doubt, don't press send. Don't do it. 2 books, guys, you want to do to go ahead and start to get yourself prepared to help you be ahead of the game. The Automatic Millionaire by David Bach, and then Rich Dad, Poor Dad. If you've ever spoken with me, I've probably recommended this book to you. I've probably recommended this book over 1,000 times because I've read it probably 10 times. It will change your life and your thinking. I'm not going to say anything else. Let's rock and roll. Learn, then learn more. As you're starting off in the stock market, guys, you don't have a lot of knowledge or really don't know what to do. So you have to give yourself what we call a competitive advantage. That is going to be your effort. Elevate your mentality. Start reading books. I tell you 1 to 2 books a month. I just gave you 2. You're welcome. Invest long term. Most of us have a 401k, and I guarantee you probably don't know how much you're putting inside of it. If you do, continue to add to it. That is money that you are saving tax-free. And guess what? You're investing in stocks when you buy 401. So we're going to even show you how to allocate and direct some of your money toward the big boomers and get your money up there. Don't let anybody tell you investing is hard, and don't let you tell yourself that. It's a lot of information out there. That's why you need a team that's going to help you narrow and focus it. If they're trying to charge you thousands and tell you to do all this and show them your credit and give them your Social Security, I don't know anything about that. I'm just telling you stuff that you can do for free and start tomorrow and start learning what to do. Be impatient, guys. And as you guys are seeing this on the screen, this is something these are slides directly from our education course that we teach if you join the CEIL Group and you start learning literally systematically how to trade from step 1 to 0. Some of our clients and our students are probably on the call right now. So it's important, guys, continue to grow your education. Be impatient. We talk about this. Lower your debt. Easy. And then, guys, find your passion. You have to know that there's something out there that makes you, if you could do something every day for free and get up every day and still do it, what would it be? If you can figure out what that is over time, it doesn't have to be right now, you're finding where your passions are. And then guess what you do? You focus and you drill down and you have discipline. Make your craft better. I'm not going to get deep in this. I can go on forever. But passion, find it. Exercise time management goes into discipline, guys. Have a schedule. You're like, how does that have to do anything with the stock market? No one sits at their computer all 7 hours and trades the whole day. You have to be disciplined to know what to research, where to get your trades in, where to get out. Take your money and go. I don't like sitting around the computer all day, and we don't teach people to sit around the computer all day. We teach you how to take advantage of the market that's mathematical. Numbers do not lie. People say, oh, numbers do lie. Guys, come on. Let's get serious here. The market is most active at the open. If you're Central Time with me, we're here in Carville, Tennessee, in West Tennessee. If you are Central Time like me, guess what time the market opens? 8:30 a.m. If you're out there in New York where the exchange is held, you start at 9:30. And if you guys are back behind us in Southern California, you have to adjust according to your time zone. But guys, be up. For my West Coast people, that means you got to be up really early, but it's worth it. The money moves the earliest in the morning. If you're a late bloomer or a late sleeper, you like to sleep in, maybe investing in stock is not for you. You're probably going to miss a lot of money when it's being spent. Understand, guys, the past does not dictate the future. We have to analyze. We teach you how to do that. We're going to give you some tips about how to do that today. Secondly, spend time on personal development. When I say invest, who am I talking about? I'm talking about investing in yourself. You are the weapon. You're the tool. You are what's going to make all this happen. I guarantee if you're not feeding your spirit, your soul, your mind, your body, health-wise, psychologically, spiritually, gosh, something's going to lag. And in life, we think we can power through everything. Balance is the strongest way to carry through any situation, any storm. Sometimes you'll be able to lean on yourself a little more, but you know where the center is. For some of people like, what is this guy talking about? Message me. I'm telling you, you have to learn how to tap into this and tap into this to be able to tap into everything else that's around you. Now, let's keep rocking and rolling. We talk about learning. You see here, the label of this one is called Charted Indicators. And I hope you guys are using your screenshot function if you're on there. If you're on a computer, laptop, you should have the print screen option toward the top where you can take a screenshot of what's on your screen and paste that on something like Microsoft Word. Use this information. Tell your people, guys, this is ways to make money. Let's keep moving. So when you start trading, if you have started trading, when you get to fully trading, you know that the only way you're going to know how the market is moving is by things indicating, aka we have indicators. So 2 indicators we have here we're going to briefly go over just to give you some insight. One is called the RSI. This one right here is called the MACD. Now, of course, these are not the actual names. The RSI is going to stand for the Relative Strength Index. Note that down, Relative Strength Index. And you're going to go and research what that is. But in short, it basically gives you an understanding of the direction and the speed and the momentum that a stock price has. We hear the terminology, what? Buy low, sell high. Well, how do we know what's low and what is high? Well, the RSI helps us with that because it lets us know that, hey, there are two ranges. This range is 30 and this cap is 70, and that's in the shaded area that you see here. Everything outside of these shaded areas are what we consider the outliers. So you're probably hearing that, oh, that sounds like that old math we did back in school. Yeah, the outliers. So those are the limits of what we consider the normal range. When a stock goes above or beneath the normal limits, it has a lot of pressure on it to bring it back the other way. Imagine like a rubber band being stretched. When the stock RSI goes above or beneath 70, we're seeing that rubber band being stretched, wanting to pull the price the other way. You don't understand what I mean? Let's look exactly at this chart. Notice that when the line goes above or beneath 70 or 30, what is the motion that normally happens in the other direction? We see a strong movement in the price. And if you notice, when the stock is here at 30, this is here. The stock then caps at 70, this is here. This is a positive momentum movement or positive trend. So what we know is that if we bought something at this first circle and sold it at the second circle, we would make a profit because we bought low and we sold high. The RSI, again, tracks momentum. So what you'll notice is that as the RSI is going from here at this high point, it's moving its way downward. Well, what is the stock price doing? It's moving its way downward. For some of my people who are in the short selling or doing puts, if you're an options trader, you know that you have a great opportunity to basically buy insurance on a stock when it's falling. This is how we make money when the stock price fails. The RSI is not a surefire indicator, meaning that that's not the only thing you're going to use in your analysis. But if you, as you see, it has a lot of correlation to what's going on with the price. And as we see here, I see hands raised. We're going to get to those hands in a moment. As we see here, and if I'm having trouble hearing me, someone do let me know. But as we see here, as the stock price goes again from this lower level, 30, or it being what we call underweight, it is moving towards the 70 range. And when it gets to the 70 range, what are we seeing? That the stock price is moving upward. So again, you're able to take advantage of the movement of the price in a short or long period of time. And if you had an investment here and you sold it here, guess what? You made a profit. That is simply how the market works. And this is how we use these market indicators to let us know. Another indicator you see that I'm going to talk about commonly, guys, on our free site is the MACD, the moving average. It's a very complicated thing to break down in a short amount of time, so I'm not going to try. The best thing I'm going to tell you is that it is similar to the RSI, but what it tells us is how is the motion and price related to basically buying and selling in the market. And basically what it all boils down to is if these two lines, the red and the blue line, are both moving in a certain direction, whether up or down, there's going to be a correlation to what is happening with the stock. Now, I can't get into it too deep, guys, but again, it's time for you to go do your outside research, aka your homework. Let's keep moving. Here's a great opportunity for you to take a quick screenshot, or if you're on our YouTube site. Again, if you're watching on YouTube, please make sure you like and subscribe on our page. That way you're able to stay up to date when we drop any more new videos or any notifications, or when we do any of our stock tips or training classes that we give out free online. When you're looking at the chart indicators here, guys, this is continued from what we just looked at. Here are the actual definitions of these indicators that I've given to you guys. I got this one marked here because this one I didn't show you guys, but any of the young traders or guys getting into the game, Bollinger Bands are going to be one that I guarantee is going to make a huge difference, huge difference in what happens in how well you're able to get in and get out and make money quickly. You're going to reduce the amount of mistakes you're making because you're letting the stock talk to you. We're not trying to go in and force our way into the market. We know where those guys end up. They end up with negative trades, and we call them chum in the water. Don't be chum in the water. All right, let's move forward. Stock oscillator, guys, again, it's just an indicator that talks about momentum, but this is directly related to the price. So we have a video that we're going to post. It'll be in about 2 weeks that goes over oscillators and stochastic oscillators all alone. That way you can learn about exit and entry prices, getting the best price for a stock and getting out with the most profit, and learning how to protect yourself in the case that the trade goes opposite or the other way on you, which is very important. If I'm a big sports guy, so when we're talking about boxing, you're like, boxing, why are you putting that in here? In boxing, it's not about how hard you can hit somebody. And it's not even really about how hard you can get hit and still keep going. It's about how you can not get hit. And if you do get hit, minimize the impact or the damage that's done. That's the same thing in the stock market. We're not always going to be able to control the fight or control what we're doing in the market. But what we can control is what we do, or we can control how we respond. We teach you counter movements or counter strategies in case things happen in the market that maybe you weren't prepared for. The best tool to have in your tool book is an open tool book, being able to add tools to your tool belt. If you feel like you've got a strategy that's working, continue to maximize that strategy. Don't change because you're losing. Focus and see why you lost and retool yourself, not your strategy. But again, knowing these indicators, guys, I hope you've either written some stuff down or give me some time to write this down. Go and continue to do your research. It's very important. Brokerage. We're now at step 3. When we talk about a brokerage, what are we talking about? Basically, it's a middleman who buys the stock, the options, the currency, the commodity, the bond for us. And you have to have a brokerage. You can't yourself physically go and just buy a stock from a company. You have to have a brokerage. We are not professional financial advisors. Remember that disclaimer we did at the front? So I can't tell you who to use or who's best. I can give you some information, and that's what we're here for, to kind of give you information. I myself actually use about 5 different brokerages, but the reason why I use so many is because over the 8 years, you try a lot of different ones to see what works best for you. I currently use Option House, who has just been acquired by E-Trade, as well as Thinkorswim by TD Ameritrade, which is a great platform on the computer, the Architect platform, as well as Interactive Brokers, which allows you to kind of have more autonomy. That's probably going to be for people who are a little more deep into the trading. But again, if you're seeing the screenshot, guys, there are just so many sites that we were able to give you and so many different brokers. One thing I will give you as far as different, I guess, information about some of these brokers, ones like Fidelity, TD Ameritrade, Scott Trade, even Options Express and E-Trade. These are going to be your larger brokerages, your Merrill Lynch. There's so many. And these are going to be your standard ones. Now, they're going to charge also your standard fees. So if you're a newbie to the trading game, I don't recommend starting off from the bat trading with these larger brokerages. You may want to start off, if you're only looking to do a stock, something like Robinhood, because you can literally trade commission free. Now, you have stipulations. You have to hold the position for a certain amount of time, which is normal in the most brokerages, but they also won't let you sell immediately, or collect your cash immediately. You have to wait a certain amount of time for the money to clear, which again, in most brokerages is normal. But again, you're not going to also have access to all the stock options as far as companies out there. They're only let you trade certain ones. And this is including penny stocks for you guys who are looking to still do this penny stock thing and blow up overnight. Something else we have for you guys, some of these are paid sites like Barron's. Let me notate this for you guys. Some of these are paid sites like Barron's, Bar Chart. Bar Chart is free, but they have some paid options. The Fool. And some of these have paid options that enhance basically the usability of the platform, make it easier for you to get the information faster. I did not start using paid sites actually until 2 years ago. So for the first 6 years of me trading, it was all these 2 eyes and everything I saw on the screen. But there are also benefits to using paid sites because as far as getting confirmation of things maybe that you've done trade-wise, it gives you a lot of perspective. And again, as perspective, they are using the machine. So they're able to kind of find some picks that maybe you wouldn't have seen yourself because obviously you're only one person. But if you're cautious of using those sites, guys, a lot of these sites we have, pretty much everyone is actually free to use. There's just some features that you have to pay for. But some I would tell everyone to have, obviously they're going to be starred. Yahoo Finance, which just is, to me, if you don't have Yahoo Finance and you're trading, I don't know. TradingView, which is one of the online charting sites that you can use. Again, that's free, and it lets you actually chart on there. And then Investopedia. If you haven't heard of Investopedia, guys, It's probably the greatest tool that's out there for free. You can learn a lot of this for free. This stock call is for free. We give information for free. What you will eventually pay for, which anybody here who's traded for any length of time, you'll start to pay for expertise, knowledge, and perspective, because that's just how it works. I've paid thousands of dollars for multiple courses. Some you've learned a great deal of information. Some of them, you realize you wasted your money. But the key is to do your due diligence, your research. You don't have to pay somebody or a bunch of money for you to learn how to be good at something. It really takes effort, which is all up to you. That's free. But again, guys, you have to go set up a brokerage. Now, they're going to ask you information like you're setting up an online bank account. Of course, they want to make sure you're not, giving or donating money or laundering money for like terrorist organizations. So you will have to confirm your identity. Again, if you have any qualms or any kind of fears, check in with either a broker or go to a bank or go to your local credit union or call up your local investment bank office. You look on Google, you can find any office there. And just get some information. Do due diligence. Go look for yourself. Don't always rely on somebody telling you something. Verify, verify, verify. That includes me also. Verify what I'm telling you. So, and then some other brokerages that some people may like, especially if you've been trading for a little while, you want something different. TradeStation, Interactive Brokers. These ones are made for kind of the retail trader. If you're looking to want to do this full time and you're serious, I'll tell you, research those guys, Trade King, and you'll see some of the slides we have tonight or some of the websites. That way you kind of get a look and see what the website looks like. But guys, you have to continue to increase your knowledge. And to increase your knowledge and know what you're doing, you got to get the information. You don't just wake up and do like this and pick the stock and you get, if you're good at doing that, if you get 80% trade success, call me. I want to take your class. I want to learn how you pick it. But if not, these are websites that you are absolutely going to need. Let's rock and roll. Now, I want to get to the big money. All right. Practice, practice, practice. And no, I'm not talking like Allen Iverson told you. Practice? Is that what we're really talking about? Practice? If you don't know what that is, you're too young, and I'm really scared. Practice? You don't know what I'm talking about? Practice? So when I talk about practice, I'm talking about learning how to trade before you start using your money to learn how to trade. In our group, we teach all of our traders, especially if you have never traded before, to use a simulator. Why not? Duh. These things have been around since I was actually in elementary school. I'm not going to say what year, a little while ago. But these simulators have been around for a long time. Virtual trading, paper trading, interactive trading, simulation trading. All right, good, 10 minutes. So, simulation trading. Guys, these things are here and open for you. I've put a list here. Hopefully you've done this quick screenshot of sites that you can go and do your due diligence. All of these, I've even listed if it's a website, if it's a program you can download on your computer, or if it is an app that you can use. I know everybody's like super phone, and I trade from my phone a lot, so obviously some of these are good here. I've used every single one of these virtual traders. So I've just tried everything. And my one that I recommend a lot, Investopedia, again, one of my favorite sites. Thinkorswim, by far the most comprehensive. You can trade anything on Thinkorswim. Currencies, commodities, bonds. You can buy and sell whatever. So Thinkorswim is a really good one. Trade Hero is incredible. Market Watch is really good also. You have to do that one from the computer, but if you're trying to become a day trader, it kind of gives you the feel of what you'd be doing, jumping back and forth. But TradeStation is really good. I also use TradeStation because you can buy through certain websites immediately. But I digress, guys. I hope you've gotten that information. Last, teach, grow, share, learn. Obviously, we're here to teach, help our people grow, share this information, and help people learn as well as learn ourselves. So please, you can feel free to check our website out, check out our Facebook page. All of you have already seen that. If I click this, will that work? Yeah, boom, boom. Anyway, but I was checking that out. That hyperlink is active. So you can get to my page. Of course, you'll see that. Here's for people who've already started trading. We're showing you basically how you start to make the money. So guys, the best way to make money in the trading world is going to be in the options market. What is an option? Good question. It's basically the ability to rent a stock for a certain amount of time. You also have a coupon. When you basically get this coupon, you're buying these stocks almost 90%, sometimes 90 to 95% on discount. Think about it. If you had a rental car, if you had a rental car that cost you $40,000 to buy, we're going to say $40K. That's a lot of money. Most of us don't have 40K to buy a car up front. However, if we were to rent it for 2 days, we would probably pay $100. So our $100 that we paid for that rental car allows us to control a $40,000 asset. This is options trading in a nutshell. We spend a small amount of money in comparison to what the stock really costs to control the weight of that asset. What we see here, let me get my handy dandy pointer tool out, or my spotlight, in case you're looking on a phone. If you see my red dot, this description here is a description of the actual company that this student was investing in. So these are all different companies, guys. And again, there are tens of thousands of companies. You can really more than that worldwide, but there are so many that you can invest in. For some of these, we're familiar with Verizon, Twitter, Walmart, McDonald's, and then some, and even gold. And then some of these you're not familiar with, guys. But what we look over here is gain and loss. This is what we love. When we see red, we know that's a losing trade, or we're currently down in that trade. Just because you're losing doesn't mean you have lost. Warren Buffett says you've only lost when you sell. So this is what we're seeing here, but we also see the green. So we see that out of all these trades, 3 of them are red. 1, 2, 3, 4, 5, 6 are green, positive. And we see the amount of money that they've made profit. Now, of course, you want to practice this first on your simulator. Don't go spending your real money. Let us teach you how to use the simulator and learn the process. It's very simple. We've already given you the 5 steps to get yourself prepared and start making trades. And you can actually teach yourself a lot of this. If you need help, you always can reach out to us anytime. But we see that this person basically bought the stock at a lower cost and on discount. It's like using a coupon and going and buying a $10 item for $1. But then we turn around and we sell the item for way more than it's worth, because what did happen? The price or the value of it went up. So that $1 item we bought with our coupon, now all of a sudden, they're like those solar ray glasses that everybody wanted all of a sudden. You could get those things for 50 cents before the eclipse was coming. The day of the eclipse, how much were people selling for? 20, 30, 40 bucks. That's like an option. We buy something for a cheap price on low leverage or high leverage for our case, and we let the price go up or down, and then guess what we do? Oh, thank you, Lord Jesus. We cash out and get the profit, guys. The key is to make more winning trades than losing ones. And we can see this student here, which I was very happy to let me use this for our classes. We saw what they were doing. They were making these profitable trades. So even them being down, looks like about what, 900, 1,000 bucks over 3 trades. The rest of their trades had them right at so 2,800. So again, we teach you how to make viable income. This is what we do. You don't have to quit your job. You can have multiple streams. They say the average millionaire has 7 streams. I don't know how true that is, but why not? Why not start adding to your tool belt, to your repertoire? Please don't be a one disc or one-sided disc. Be a double disc. Give some value to yourself. Now, we're going to give you all my favorite part of this, the picks. So guys, first of all, we always know earnings announcements. I see Austin, Mr. G's on the call. I know this is one of the young up-and-coming stars. We know he does earning. He does a lot with earnings, and he's very watching these closely, guys. All earnings are, if you don't know, is companies are required every 3 months to release their financial statements. How well you've done. Are you making money? Are you losing money? Are we on track to get paid? Or are we going broke? Traders basically analyze the company and see, is there money to be made up or down? You can be very wrong in earnings. So I always give recommendation this way. There are only 3 ways to trade this thing. You either trade up until the earnings happen, so right before it happens. You trade through the earnings, meaning you're going to go long-term investment, or you wait until the announcement happens and you trade what happens in that instant. All 3 of those scenarios are ways that you can make money or protect yourself from a big loss. Don't bank all your money on these things. But we see some big companies here. Tesla, Shopify, Chegg, they rent books. Oh, that's crazy. Yelp, Blue Apron, Arista, a company we just showed you that one of our guys, I think he was down in this trade. He may not be down for long. And so many more, so many other ones. There are actually a lot of companies, Facebook, Groupon. But these are the big ones that people are looking for. So be aware of that. Some of the trades that we want you guys to be aware of coming up, Vanguard, VNQ. So with the V and Q, guys, this is a ETF or an exchange traded fund. All that means is there's no real company. It is the mathematical performance of every company that they're invested in put into one stock that you can trade. And as we see, guys, this thing is going up and down, and we're just coming off of a deep floor. Under Armour, I'll make sure I pull that up. We're coming off of a deep floor here, meaning that the stock price has a good chance to go back up. We even have our trade lines here letting you know where we are in relationship to the ceiling and the floor. That's very important, guys. Well, I wish we could go over that, but we don't have the time. Next one, my favorite, my God. My team, I mean, I've put this on Facebook how many times? I know y'all are probably sick of this, but we were predicting this trade for weeks and weeks to come. We knew that the stock was way overweight, and we knew what was going to happen. It was going to fall. We made a ton of money. I'll leave it at there. Guys, it's a mathematical range. The stock likes to stay between a certain range. When you learn how to analyze that range on a short-term and a long-term basis, you put yourself in position to make money. Now that this stock is way underweight, we'll want to watch and wait and see. Let's see if it starts to climb its way back up. If it does, we're in for one great ride. All right. Our other company, CELG, so Celgene Corporation, huge drop-off, guys. This stock normally is trading like in the 150s, 160s, 140s. It's right now at 98 bucks. That's what we call a discount. Watch this stock. Use your indicators. You do not have to pay for the overall stock. Remember, options. We can rent these companies for much cheaper. Another one, Merck & Co. Again, a biotech pharmaceutical company. All of the biotech and healthcare companies had a big drop-off. Look these ones up and watch them come up over time. This one passed a very critical level of 59.50. So I'm very excited to see the performance of this one coming up. Cummins, we know that this is a manufacturing company that's very hybrid. They do a lot of things. They're at the peak. I'm interested to see if they continue to shoot up or if we have some retraction. And another one I want to give you guys is CEMP Sempra. We see that they've bottomed out. A much cheaper stock for my people who are just getting started. We don't want to spend too much leverage. But this one should start to come up over time, but give it some time. Let's watch it. And my last one, guys, I'm going to give you IMDZ. Huge drop-off. Again, much cheaper. Watch this one. It may give you some help. Thanks for following us. We'll see you later. We'll be on YouTube.